Euro area growth slowed but didn't stall in the fourth quarter of 2022. The outcome was better than was initially expected, as the adverse economic effects from Russia's unjustified war were partly buffered by improving supply conditions and fiscal support related to the energy crisis. While confidence is rising and energy prices have fallen, we expect activity to remain weak in the near term. According to Eurostat flash estimate, and this number, by the way, is calculated using an estimate for the German inflation at this point in time, inflation was 8.5% in January. It is likely to be revised slightly upwards when taking into account the German inflation numbers which have now been published. The decrease compared with December was mainly due to a sharp drop in energy prices. At the same time, the prior surge of energy prices and other input costs is still feeding through to consumer prices. Overall, price pressures remain strong and underlying inflation is still high. If, for instance, you exclude energy and food, inflation remains at 5.2% in January, the same as in December. Looking at the labour market, wages are growing faster, supported by robust employment dynamics, with the main theme in wage negotiations becoming how wages can to some extent catch up with high inflation. And even though most measures of longer-term inflation expectations currently stand at around 2%, these measures warrant constant and continued monitoring. The risk to the growth outlook are now balanced, or rather more balanced than they were in December. Russia's war against Ukraine and its people continues to be a significant downside risk. But a faster resolution of the energy shock would support growth. The risks to the inflation outlook have also become more balanced, especially in the near term. So, against this economic backdrop that I have summarised very briefly for you, what is our monetary policy? Well, at our latest meeting on February the 2nd, a few days ago, we decided to raise the key ECB interest rates by 50 basis points, and we expect to raise them further. So, in view of the underlying inflation pressures, we intend to raise interest rates by another 50 basis points at our next meeting in March.